Awesome, you guys. Well, we're live now on YouTube and just wanted to take a second to introduce Anna Benz. She is our Senior Vice President in Movement Mortgage with for all non-agency QM lending, non-QM lending, sorry. And what does that mean to you guys? Well, we're going to learn a lot about non-QM today and jumbo loans, and kind of how that differentiates from the traditional conventional loans that we typically do a lot of, and all of the government loans that we're always doing. So, I mean, I would say about 95% of my business is in the regular conventional realm, although it would be nice to kind of transition into jumbo loans. I'm not going to lie. They are a lot of fun, but they are very, very complicated. And Anna has been doing this since, did you say 1990?
Yes, 1990 I started.
Wow. So she's been with us. We are fortunate enough to have Anna come over from one of our competitors along with our entire team, where she built a portfolio. I think it was something like 1.3 billion you guys had done in funding when you had left. And,
no, that was $1.3 billion of originators that left that company to join me at this company when I joined Movement Mortgage.
Wow, that is incredible. I mean, you know, to have that amount of clout that many people are going to follow you is just, I mean, speaks volumes. And we're just so lucky to have you on board. And you guys, whenever I've bumped into any kind of issues, like I can literally just DM Anna and she's right on it, helping us out, getting stuff done. It was pretty incredible to have her here, and a resource that we've never had before. So Anna, take it away. Give us a little bit of background about yourself and kind of and how and what you're doing here behind the scenes.
Absolutely. Thank you guys so much for the time this morning. So non-agencies, what we're going to be talking about today specifically is anything that's not Fannie, Freddie, VA, FHA. That falls into my world. So with Movement Mortgage, we have over 23 different non-agency options in-house. That means that when I say in-house, that means something that's my team is actually delegated on those programs. So we will actually be making the credit decision on those, funding those loans, and then delivering it to the investor. On top of that, we have over 30 non-agency options. So collectively, our originators have over 50 non-agency options to get a loan closed, which is really exciting in today's world. I know that about 2 years ago, many of us were very, very busy with the agency stuff, so busy that a lot of our originators weren't able to learn about all of the expansiveness that non-agency delivers to them. So non-agency can be driven strictly by loan amount. So anything above a conforming or a high val loan amount that goes into the jumbo space. So that makes it non-agency. Non-QM also makes it non-agency. Non-QM stands for non-qualified mortgage. They do still meet ATR, which is ability to repay, which was after the mortgage meltdown. Frank Dodd came out with all of these great regulations. So we do meet ability to repay guidelines, which means we're not doing 80-20 stated income loans, but we are doing loans where income is validated, but sometimes in a very unique way to help our borrowers qualify. In a nutshell, at Movement Mortgage, in my space, in the bank space, I really feel like we have three very distinct buckets to help our borrowers in the non-agency space. The first one is an AUS-driven program. So for our originators who are very used to a Fannie or Freddie loan, it basically is a Fannie Freddie loan, but it goes up to $3 million, 90% LTV, no MI. So you don't have to worry about that MI component. And it has the ease of an DU or an LP, so Fannie or Freddie type of guidelines, that type of ease of use. Those loans were closing quite frequently in anywhere between 10 to 15 days. That's like a normal on an AUS Express driven program. So Ed kind of touched on this earlier about,
jumbo, amazing, right? That's incredible. I mean, going up to like a couple $1 million and being able to slam something through in a couple of weeks. I mean,
yeah.
That's just unheard of. You can't go to a big bank and do that.
No, you absolutely cannot. And that is an exciting program. And I love our AUS Express driven programs because most borrowers can understand also, you know, if they've done a conforming loan and they're like, wait, I only needed to give you one pay stub last time. Now, why do I got to give you 2 pay stubs or a month's worth of pay stubs and 2 years of tax returns and all of this additional documentation, which is usually what you need in the jumbo loan space. That's a traditional jumbo loan, but the AUS Express loans, we've closed them with no pay stubs, just a written VOE, right? So you're talking about the ease of use for our borrowers to be able to close very quickly with little income documentation, makes it, you know, transferred appraisal. So if you had a loan that started with somebody and then all of a sudden that lender couldn't perform, our originators could step in and say, okay, well, let's just transfer the appraisal over. We can close the loan for you in 7 to 10 days. Up to $3 million, up to 90% LTV, no MI. So that is a very exciting bucket, the AUS Express bucket. Any questions about that one before I talk to you about our other 2 amazing buckets really in the non-agency space?
You know, if we could backtrack here for half a second, I want everybody to understand kind of when you were talking about, you know, we have 23 in-house, right? And then another 30 some odd. What's a difference? Can you explain to them what's the difference between like delegated and say correspondent lending?
Yeah.
I don't think that we've never kind of gone over anything that in depth.
Absolutely. So delegated means we as a company have credit authority. So we as a company will underwrite the transaction ourselves. We have control over the transaction the whole time. We will dock it out ourselves and we will fund the loan ourselves. After we do all of that, then we deliver a funded closed package to the investor for them to look at after we've already funded the loan for you. That's delegated, that's correspondent. So that's the world that I live in. Brokered is where you as an originator are going to take the loan and send it to a broker, and the broker is going to underwrite it. The broker is going to condition it out. The broker is the one that's going to tell you whether or not you need, you know, these items for your. Now, the docs will still be, we will draw the docs, but they're going to fund it. So we lose a little bit of the control aspect of it. Movement Mortgage is amazing when it comes to support, right? So we try to do everything banked in-house as much as possible because we know then that we can control the experience. We can control the service level. You can jump on the phone with one of my underwriters and say, hey, I got to close this loan and docs need to go out tomorrow by 8 o'clock in the morning. And because I have East Coast and West Coast underwriters, I have a team of over 30. I can say, okay, well, then one of my East Coast people are going to, you know, get this for you early in the morning. You're in California. By the time you come in, they've already looked at it and you've got docs clear to close by 7 o'clock in the morning, which is really 10 o'clock their time, right? So the control aspect of us being able to really control the experience is what I love about the banked space versus brokered out.
So, I mean, brokered out it's a little bit more challenging, obviously, since we don't have the control, but it does provide us with a whole lot of artillery in our belt. And we have all sorts of different types of loans that we can do. Even though we can broker them out, we can still do a lot of the ones that we broker out still in-house.
Yep.
And you were about to get into that.
And most originators will try to keep it in-house first and foremost because of the fact that it's a relationship, right? You have relationships with your underwriters here and your team leads here and your management here. You know who to call to get help just like that. So your first choice is going to be keep it within your team. If there is not a fit within the team, then we will say, okay, well, let's just go ahead and broker this out. Now, you have an AE, we have an AE that wants to make sure that that experience is good as well, right? They want to earn your business. They want you to send them more business. So they're going to compete to try to say, hey, wasn't that a great experience? Didn't you love that? So, you know, you're going to get both. You're still going to get service in both worlds.
That AE is an account executive, you guys.
Yes, I'm sorry.
Okay, I'll translate. It's okay. We're good. Oh, we're good. Oh, no, that's fantastic. So I'm so sorry to interrupt. You were about to like segue into non-QM and jumbo. Yep. When you were talking about the preferred express programs.
Yeah. So the next bucket that we have available here is the traditional jumbo. So a traditional jumbo would be like a Chase loan, a Wells Fargo loan, that type of a feel of a loan where you're going to get, you know, a minimum of 6 months reserves. Oh, that's what I forgot to mention about the AUS Express programs. So our AUS Express programs, let's go back to that very first bucket that I love. That bucket because it is AUS driven, so the AUS is going to tell us what the reserve requirement. So a lot of times in that bucket, the reserve requirement for your borrower is significantly less. I've actually closed jumbo loans with 0 reserve requirements. That is unheard of in the jumbo space. Usually in the jumbo space, now let's go back to the prime jumbo bucket, right? The prime jumbo, the Chases, the Wells Fargo, the CITs, the TD banks, those types of banks, they're going to want a minimum of 6 months reserves for your borrower. So that means that your borrower not only has to have that down payment, closing costs, but also 6 months of reserves after they close the loan in order to qualify for some of those transactions. Whereas in the AUS Express loans, we have where you can do 0 reserves or 3 months reserves. Two of the 3 programs we have in-house are a minimum of just 3 months reserve. One is whatever the AUS calls for. So lower reserve requirements is also a fantastic thing.
It's
go ahead.
It's huge because I mean, think about it. Some of these people are like so stretching to be able to afford some of these properties here in Southern California, right? And they're using every penny that they could possibly muster just for the down payment and closing costs. And then they're left with barely anything when they move in, right? And so when you do have these programs, like our preferred programs that don't require those reserves, I mean, that gives you a huge leg up in getting approved for a loan, especially when it comes to these high dollar amounts that we're seeing more and more.
Absolutely. And we just launched a 2-1 buy down on our AUS Express program. So you can actually do a buy down, which is really unique in the jumbo space. A lot of times buy down doesn't really live in this world. So it's exciting that we do have buy down options as well. Next bucket is that true prime jumbo bucket, right? So we kind of talked about if you've done jumbo before, that's going to be usually over high val limits, and it's going to be a little bit trickier, but that's where the borrower is usually going to be rate sensitive. They're going to want to really look at that prime jumbo bucket. Those investors want the cream of the crop borrowers, the one who, works at Google and has been there for 15 years and their DTI is super low and they have a ton of money in reserves. That is that type of borrower. They're willing to pay for that, as in much lower rates, because the credit box is going to be significantly tighter. This is the customer that they are looking for. But if your customer is that customer, they can be rate sensitive. And so that's where the prime jumbo, and we have the bulk of our investors in that prime jumbo bucket. I've got 3 in the AUS bucket. The bulk of mine are in the prime jumbo bucket. This is where we have the medical doctor programs for those borrowers who are new just out of residency. They have special guidelines that they need because they're a medical doctor, and we understand that their income projection will be very high, but maybe they're early on in their career, and so their income isn't that great yet, and they have a lot of student loans that they need to repay. So it's a easier qualifying program, higher LTV, lower on your student loan debt repayment for the doctors to qualify. So that's going to live in that prime jumbo bucket. Third bucket is the non-QM bucket. This is my very, very favorite bucket, the non-QM bucket. Non-QM meaning non-qualified mortgage. And those loans start at anywhere between $100,000 and $125,000 and go up to $3 million. Why I'm so excited about the non-QM bucket is because it really expands your options. So in that space, I can go up to 90% LTV. I can go up to $3 million. I can go up to 50% debt to income. And in that space, I have alternative ways to qualify a borrower, either from their income documentation alternative, like get rid of your 1040s. If you're self-employed and you have an amazing CPA, you are going to have a hard time qualifying off of your 1040s. So we have alternative income documentation, giving the borrowers 12 months of personal or business bank statements, and we're going to look at their cash flow instead of what they told the IRS they made. And at the end of the day, after all of their deductions, their net was We're really looking at their cash flow in their personal or their business account, right? To be able to really see what that borrower's true income potential is. So that's one amazing thing. Another is asset depletion. So if you have a borrower, say, that doesn't work, but they've got $1 million sitting in an account, $1 million on one of my programs, it equates to $16,667 of qualifying income a month, just by the fact that they've got $1 million in assets. So you can qualify a borrower where the only thing you've given the underwriters is 2 months of their bank statements to prove that they have X amount in assets. And so it's called asset depletion. We just say, okay, if you were to live off of this for the next 60 months, what could you deplete every single month to be able to qualify? The depletion program, most lenders will have a depletion program where they say it's the life of the loan. So if you're doing a 30-year loan, you're going to deplete over 30 years. Some like Freddie has a depletion that's 240 months. I've got an asset depletion that's 120 months. So I just doubled your qualifying income. And then I have another asset depletion that's only 60 months, doubled your qualifying income yet again. So for those borrowers who may be on a fixed income, right? They have checking, they have retirement, Social Security, a pension, but they have a ton in 401k and a ton in stocks and bonds and a cash value in their life insurance or money sitting in their savings and checking account. You collect all of those assets, be it liquid or non-liquid. You apply a little bit of a haircut and then you say, okay, this is what we have in combined assets. So you can do it in conjunction with other income sources or as a standalone asset depletion only, where that is the only thing we're going to look at. So that's exciting.
I just had that with one of my files. It was a self-employed borrower. He was a CPA. He had a ton of money sitting in the bank. But you know, CPAs do a really good job of taxes, right? So he didn't show a ton of income on taxes. So we used his corporate bank statements. And instead of doing like $10,000 of income a month, which is what he showed on a conventional aspect, we were able to get him 15,000. And if I needed to get really aggressive and get outside of the box for him, I could have brokered it out. We could have gotten $25,000 a month for him. So it just depends on, you know, having all this selection and having all these choices, right? That Anna has brought in. We didn't have this when we started, like when I started 8 years ago, like this. I had a couple of jumbo loans and that was it. Like the broker space barely existed. And Anna has been out there. She's just known throughout the industry of bringing all of these partners into play and making our life that much easier. So, and in turn, you guys have that availability to you as well. And being able to have a loan officer that's got 50 different choices just in the jumbo and non-QM arena is just unheard of. Thank you. Sorry, just wanted to give you a little.
No, that's great. And then the last one that's really exciting in that space from an income qualifying purpose is a debt service coverage ratio. So that's a borrower who wants to buy an investment property. On their application, they don't have to tell us their job. We don't care if they have a job or not. They don't have to give us any debt information because the only ratio that I'm looking at is the PITIA, so the principal, interest, taxes, and insurance on this investment property that they want to purchase versus what the rental income will be on that investment property that they want to purchase. That's the only ratio that's looked at on that transaction. So, you know, if you have a borrower who buys a lot of investment properties, that's their business, then they are going to want to possibly look at the DSCR program. So that is another interesting one that Ed can tell you all about. I'm trying to just throw all of this out here to kind of open your eyes of like, wow, what is non-agency? What lives in that space? We also have in the non-agency, non-QM space, borrower who may have, you know, say, you might run into borrowers like, oh, I'd love to buy a house, but I can't because I had a bankruptcy 2 years ago. Well, I have programs that it's one day out of foreclosure, 12 months out of bankruptcy, and I can help that borrower. I can help that borrower up to $3 million, 90% LTV, as low as $100,000 loan amounts, right? So a huge range, but it's that credit. And if they don't know, you know, they hear about, oh, I got to wait 4 years, or I got to wait 7 years, right? There's so much misinformation out there that is not true. You can actually be 1 day out of foreclosure and 12 months out of a bankruptcy and still qualify for a mortgage. And that's just misinformation that's floating around out there. And that's why it's really important that you work with a originator that has access and understands how to use all of these different programs.
Questions, you guys? I know Anna's been kind of throwing a lot of information at you. But hopefully it's expanding the mind here, right? Like understanding that it's not just, you know, your traditional FHA, VA and conventional loans that are available to people and all these different things that we can do. Anybody have any questions? Malik?
Yes, I have a question.
Yeah.
Good morning. How y'all doing?
Good morning, man.
Morning.
Good, good. The Fannie Mae, can you go a little more in depth? Because I really want to learn the investor side of the loans and stuff like that.
So Fannie Mae and Freddie Mac they traditionally do conventional loans.
Oh, sorry.
It's okay. But they also will go the route of like, so we have to submit through Fannie and Freddie to get an approval for, say, FHA or a VA loan or a USDA loan, right? So they're the government agencies that pretty much securitize all of these different loans, right? I mean, I would say 85-90% of all mortgages out there probably go through that channel. And so basically they are providing all this money to buy up all these loans, and they sell it on the secondary market, but we have to follow their guidelines. We have to follow their rules in order to be able to hand out that money, right? So if they don't fall into the buckets that they provide us, that's when we have to think outside the box. That's when we have to go into non-qualified mortgages and start trying to get creative with people. Just like I was using as an example a little bit earlier, I had a gentleman who makes a great living. I could have qualified him with a conventional loan using Fannie Mae guidelines with just his tax returns, but he needed more income. So I had to get creative. So then I started looking at bank statement loans because I knew he wrote everything off, but he made a tremendous amount of money, right? This guy has 6 different accounts with $250,000 in each one. I mean, he makes good money. You're not making that kind of money by making $10,000 a month, right? So I started looking at different non-qualified mortgages. We wound up with a bank statement loan, doing 1 year of bank statements, and we were able to get him qualified that way. So Fannie Mae and Freddie Mac is kind of more your traditional route. This is all Anna's wheelhouse is all non-traditional route. Like all the thinking outside the box, that's where her brilliant mind comes into play and figures it out and brings all these players to us so that we have access to them. Do you want to show them the matrix?
Yeah, let me show you guys real quick. This is the matrix that my loan officers have access to. That kind of just shows them all of the different programs that we have in-house. So here are 3 of the investors. These are the AUS programs that I was talking to you all about, the first bucket. And then these are the name of the investors that are the prime jumbo. So this is just one tool that our loan officers have to look at to try to decide where should we place this loan. And it's a lot. There's, the 3 AUS I mentioned. Hey, yeah, we've got 3 AUS programs. We've got the prime jumbo bucket, and then we've got the non-QM bucket, which still there's a lot of programs here. And why I think that's so exciting is, you actually had an excellent question about agency. And if you are an originator and that's all that you understand, right? And you're not educating yourself, just like you guys as real estate agents are constantly having to educate yourself and learn new programs and learn, ways to market and all of these things. Our originators need to do the same thing. And if they're not doing that and they're learning what else besides agency, Ed's right. I would say anywhere between 85 to 90% of all of the mortgages that are originated here, because we do a lot of purchase shop, right? Are going to be agency, Fannie, Freddie, FHA, VA. That's agency. It's the 10 to 15% that doesn't fit in that box that can make a huge difference. And that's why we've, as a company, invested so much in having all of these different options so that our loan officers, our originators can be competitive. They can go out there and say, well, let's see what traditional agency does and let's get that done. If it works, great. We'll shove them that loan. Everybody understands that program. But if not, every shop has the same agency guidelines. Every shop has Fannie, Freddie, VA, FHA. Those are exact same guidelines. And if that's all you have in your tool belt, how are you any different from any other shop? what makes Movement Mortgage different is, yes, we're great at the agency, but now we've also invested the time and the effort and the resources to be great at the non-agency, so that an originator like Ed can say, okay, it won't fit in the agency box. What other options do I have to be able to close this? You've got 20 something options in-house and 30 something options out of the outhouse, brokered out, to be able to say, where can I fit this? You don't have just 4 options, Fannie, Freddie, FHA, VA, right? You've got 54 options for him to look at to try to say yes. And that's his job, is to be able to look at, use this tool to be able to say, okay, where should I place this borrower? What is the best loan that I can get for my borrower?
And then if I can't find someone on that box, I'm looking in this box. And so now I'm looking at, okay, so I need to do a bank statement loan. And these are all of my different options on bank statement loans that I can't do in-house. I got 3 of them in-house, and they worked just fine. Like, we closed the loan on Friday, and it was a 18-day jumbo loan. I mean, and we had to switch halfway through because it came up agricultural land.
Oh, yes.
And we had to start all over again, right? In the middle of an 18-day jumbo escrow, like, unheard of. And we still wound up closing on time. Like, it was spectacular to see it all play out. And with Anna's team's help, I mean, we were all able to, but I mean, I was sitting there on the horn calling all these different banks. Look at all these different banks, you guys, that we have access to. If we need it. Like, it's a game changer to have this. Like I said, when we first started, we didn't have all this in our tool belt. Now we do. And it definitely makes my life a lot easier. Although a lot more complicated, because there are a lot more options to learn, and you got to learn all the nuances. Who knew about agricultural land, right? Well, we come to find out in the same exact day. So it's one of those things where we're constantly learning, constantly evolving, and growing as a team, as a bank, as colleagues. I mean, it's awesome to watch it. Like I said, I've been here 8 years, and I couldn't fathom going anywhere else, because the culture is the right place to be at. And with all that being said, I mean, who else is giving back half of their profits back to their communities? I mean, that's what Movement's all about. That's why we love this community. Like, that's why we love this bank so much, because the heart lies in the right place. Man, we're doing the right thing. We're helping so many people. And I think you said it last time we spoke. We got the 3 S's, right? We got the speed down pat. Like, that's not a problem. The service is incredible, impeccable. We're always available to all of our clients. And now we've got that selection to really set us apart from the rest of the pack. Like, you can't go to a big bank and do this. You can't go to a credit union and have this kind of service and these kind of options. It just doesn't exist. So it's pretty badass to know that I've got you on my team. So thank you so much.
Oh, that was, I like the 3 S's. I'm going to use that. And that's a perfect way to describe, I think, Movement Mortgage. And honestly, guys, that's why I'm here, right? I love that it's service. Leadership serves. And I love that, right? Like, I'm here to serve Ed. I'm here to serve all of my loan officers, all of my, like, your close of escrow date is important to me, because that is what the borrower is expecting. So my entire team, and I have a huge, big team. Most IMBs, independent mortgage broker offices, right? They don't have huge non-agency teams. I've got a really big non-agency team, and that is all that they do all day long. And we are busy. We are really, really busy, because as the market has shifted, and you guys know what it feels like as real estate agents on the front end with the market shift. Our originators also are feeling that the market has shifted. And so they're having to say, okay, my clients might have different needs now than they did 2 years ago. This might be a different type of a borrower. So what do I have in my tool belt to be able to help that borrower get into that home? Because in today's market, every borrower is so important, right? Every close is so important. So we love that, we do it as a partnership. It is very important for me to have my entire team. Got a credit policy manager, a jumbo underwriting manager, 4 team leads, an East Coast, West Coast, Central Coast team, a scenario desk to support our originators up front. Those are all things that enable the originators to quickly make a decision and quickly be able to help our borrowers in a very, very tough market, which makes us stand out. So I love the 3 S's. Thanks for that, Ed.
Yeah. Well, I get that from you. I think you said it in passing to me, and I'm like, that's brilliant. I love it.
I probably didn't even put it all together that I had said that, but I'm like, that's
It's my
great.
it's my new elevator pitch right there.
Oh,
So I thank you so much for coming on board. I mean, unless there's something that we left out, I think you kind of touched on everything that there was to touch on with jumbo loans. They are a little bit different, you guys. Every single bank, whereas we have, these guidelines for 85-90% of our business that go directly to the government agencies, right? Those 10 to 15%, each one of them has their own set of rules. Each one of them has their own set of guidelines and their own flexibility. And having a partner like Anna on board, she's able to reach out to them and be like, hey, could we get an exception on this one? Like, I know this came back as this, but it kind of falls into where your guidelines say, but there's a little bit of a gray area. Would you allow us to do this? Would you take this loan for us? Like, you can't, Wells Fargo. Yeah, right. Like, yeah, nope, not going to work. See ya. Bye. And
most other big bank lenders aren't even touching it in 18-day jumbo. Not even close.
No such thing. So, just having that flexibility, you guys, is pretty awesome. And just to let you know, in about 4 or 5 weeks or so, we're gonna bring in one of our broker partners to dive deep into these non-QM loans for you. All right. So I know today was kind of like, I wanted to touch on it. I wanted you guys to have a general understanding of what non-QM is, what jumbo loans look like, what the differences are. They are unique, each and every one of them. We have to go through all these guidelines to figure out where they fit into and where our borrowers fit into which box. But that's our job. That's what we do best. And if we get stuck, I got Anna. Like, it's awesome. I hit her up. Like, here's my scenario. Help me out. And she's like, yep, call this guy. Go look at this program and read through the guidelines and let me know if it's awesome. So we're going to have one of our partners come on. They're going to dive deep into non-QM. We're going to be going over DSCR loans and bank statement loans. We're going to be talking about, different types of asset utilization programs and so forth. So hopefully you guys will be able to make it then. And with that being said, thank you so much, Anna, for taking the time. I really appreciate it.
you're welcome. It was a great meeting, everybody.
Yeah, it's awesome to be on a team with people who you could trust and you could get a hold of on a drop of a dime. Try getting, big banks don't get a hold of underwriters via telephone or text or Microsoft Teams.
Yeah,
it's crazy.
They're not
Yeah,
allowed.
I mean, my email signature line has my personal cell phone number on it for anybody at the company to reach out to me. Like that's how accessible I feel like we need to be.
Yep.
Especially in a market like this, we're here to support you. So from an operations point of view, if you need to get a hold of us, you need to constantly, cell phones ringing, IMs are going off, emails are going off, right? That's just the nature of the business. And we're right there in the trenches with you all.
Well, yeah, and you're also helping our buyers move to the head of the line because they can compete with the cash offers and, I mean, what more can we ask for?
Oh,
Yeah.
Trish?
I'm glad you see the value in that. I think there's a lot of value in being able to work with a professional that truly has a lot of tricks, right? A lot of different options. That is, especially in this market, you need to have options. It's not think about the people who are, in my personal opinion, the people who are buying, the people who are highly, highly qualified are probably kind of waiting on the sidelines to see what's going to happen. Unless there's a divorce going on or a death or a job move or something else. It's like, I don't want to move right now. I've got an amazing 2.5% interest rate. I'm going to sit on that for as long as I can. So the people who are coming to you, they need an answer. They want to move for a reason and they need a solution. So if you're able to partner with somebody that has lots of options, that's an amazing formula for success right there.
Very true.
Yes, thank you for all this information. It's really helps a lot.
Nice.
Awesome.
Glad you were able to make it. Cool, you guys. Well, I hope you guys have an awesome week, productive week, powerful week, getting really busy out there. And please let us know if there's anything we can do to help you out. We're always here to serve you. So thank you, Anna, for being here. Really appreciate you.
Thank you, Anna.
Thank you.
Thank you, Anna.
I will talk to all you
Thank you,
guys
Eddie.
soon. Thank you. Thank you. I'll see you guys at the stats meeting on Wednesday. Don't miss it.